Welcome to Global Economic Brief by Cato 5, where we uncover the hidden mechanics of finance. Today, we witness a historic anomaly in silver, a $3.4 trillion financial magic trick played in real time. In late January 2026, the precious metals market witnessed a terrifying plunge, shaking the confidence of investors around the globe. We watched in disbelief as silver prices collapsed from $121 to $95 in just a few hours. This 22% drop devastated portfolios and triggered a wave of panic selling that rippled through every major financial hub. However, a massive paradox is unfolding right now. The price on paper is crashing, but the real metal is vanishing. There is a complete and total disconnection between the paper derivative markets and the physical reality of supply and demand logistics. While the charts suggest a bear market, the physical world is screaming scarcity, creating a dangerous trap for the uninformed investor. This crash is not a reflection of value, but a result of massive sell-offs of paper contracts without real metal backing. The market is flooded with digital promises, creating an illusion of abundance while the actual vaults are being drained of inventory. To understand this phenomenon, we must look at the major mints around the world that are currently signaling a critical emergency. The Perth Mint, one of the largest refiners globally, has effectively stopped selling to the public due to lack of supply. Production lines are halted not because of a lack of demand, but because they simply cannot source the raw silver needed. Similarly, the U.S. Mint has paused sales, leaving dealers and retail investors empty-handed despite the plummeting spot price on the screens. Dealers are overwhelmed with buy orders they cannot fulfill, creating a massive backlog that the paper market completely fails to reflect. The Royal Mint in the UK faces the same predicament, with inventory levels dropping to historic lows amidst this price crash. If the price is crashing because nobody wants silver, then why are the world's biggest warehouses standing completely empty right now? This is the smoking gun that proves the price discovery mechanism is broken and controlled by algorithmic trading, not physical settlement. Western banks are dumping paper contracts to trigger stop losses, forcing weak hands to sell their positions in a manufactured panic. These predatory tactics are designed to shake out leverage, but they create an incredible opportunity for those who understand the game. While the West sells paper, the East is buying physical. A massive wealth transfer is occurring across the oceans right now. China and India are aggressively accumulating physical silver and gold, taking advantage of the artificially low prices set by Western markets. The Shanghai Gold Exchange reported a massive withdrawal of 27 tons of silver in a single day during this crash. 27 tons leaving the vault in one day is a clear signal that smart money is taking possession of the asset. In India, the demand remains insatiable, with premiums on physical silver soaring far above the spot price listed in New York. The spread between the paper price and the price you actually pay to hold the metal is wider than ever before. This divergence indicates that the paper market is losing its ability to dictate the true value of the physical commodity. Even the London vaults are seeing their stockpiles deplete as metal flows east to meet the demand of industrial manufacturing hubs. Silver is not just money, it is a strategic industrial metal essential for solar panels, electronics, and the green energy revolution. Another flashing red warning sign is the lease rates for silver, which have skyrocketed to an unprecedented 39% recently. High lease rates mean there is a desperate shortage of available metal for immediate delivery in the wholesale interbank market. This condition, known as backwardation, occurs when the market is willing to pay a premium to get the metal right now. It is a rare anomaly that signals extreme physical tightness, contradicting the bearish narrative portrayed by the falling futures price chart. What we are witnessing is a financial magic trick, They distract you with falling prices while they make the inventory disappear. Do not let the screens fool you. The price you see is for a contract that may never be settled in metal. Smart investors are ignoring the noise and securing their positions in physical assets before the window of opportunity slams shut forever. History shows that paper smashes are often the final act before a true price discovery phase sends values to new heights. The paper game is ending. When the music stops, only those holding the physical asset will have a seat at the table. We are already seeing the early signs of a run on the banks. But this time it is a run on metal. Imagine waking up to find that your silver investment is nothing but an IOU from a bankrupt counterparty in the system. Mining supply is inelastic. They cannot simply flip a switch and produce more silver to meet this overwhelming physical demand immediately. We are approaching a mathematical breaking point where the leverage in the paper market acts as a coiled spring for prices. The lower they push the price, the new hun they compress the spring, and the more violent the inevitable reversal will be. Mainstream media is ignoring this story, focusing on the price drop rather than the structural failure occurring beneath the surface level. This is not just about silver, it is about the loss of faith in fiat currencies and the paper asset system. Owning physical metals is your only shield against the systemic risks that are currently compounding in the global financial banking sector. When the ship starts to list, you do not want to be holding a ticket for a lifeboat, you want the lifeboat. The gold-to-silver ratio is also flashing signals of extreme undervaluation for silver relative to its yellow metal counterpart today. Remember, silver is consumed, unlike gold, which is hoarded. Silver is used up in industry and disappears from the stockpiles forever. Much of the silver produced is lost in landfills, making the remaining above-ground stock even more precious than most people realize. The East understands this scarcity. They are not selling. They're using this paper crash to drain the West of resources. Central banks in the East are accumulating at a record pace, preparing for a new monetary system backed by real assets. The era of paper manipulation is running on borrowed time. The physical reality will eventually override the digital price suppression schemes. If you hold it in your hand, you own it. If it is in a vault overseas, you are merely a creditor. Counterparty risk is the single biggest danger in this market environment. Do not trust third parties to safeguard your financial future. The gold-to-silver ratio is also flashing signals of extreme undervaluation for silver relative to its yellow metal counterpart today. Remember, silver is consumed, unlike gold, which is hoarded. Silver is used up in industry and disappears from the stockpiles forever. Much of the silver produced is lost in landfills, making the remaining above-ground stock even more precious than most people realize. The East understands this scarcity. They are not selling. They're using this paper crash to drain the West of resources. Central banks in the East are accumulating at a record pace, preparing for a new monetary system backed by real assets. The era of paper manipulation is running on borrowed time. The physical reality will eventually override the digital price suppression schemes. If you hold it in your hand, you own it. If it is in a vault overseas, you are merely a creditor. Counterparty risk is the single biggest danger in this market environment. Do not trust third parties to safeguard your financial future. Be the contrarian. When the world is selling in panic, that is usually the exact moment you should be buying aggressively. The futures market is a digital casino. It has little to do with the fundamental economics of digging metal from earth. Look further ahead. In a world of digital illusions, tangible assets are the only anchor that will hold when the storm hit. Once the physical shortage becomes undeniable, the price suppression mechanism will fail. And true price discovery will finally be unleashed globally. Protect your family's future. Build your own central bank. Be your own guarantee in a world of broken financial promises. Thank you for watching Cato 5. We are dedicated to bringing you the financial truth that others try to hide. Stay vigilant and protect your real wealth. Goodbye.